Hello and good day, everybody. JJ8 here with another advanced order flow trading course. We are looking at NASDAQ 1-minute chart. As always, the first rule of the thumb is to wait for liquidity sweep, which we did. The price went above these highs at $438 and then broke the structure. We go deep into this trade and I will explain everything. On the left hand side we have last day's point of control, which is 1100 contracts here at $450. On the right side we have the point of control of the day with 390 contracts at $400. Furthermore, we have equal lows and a sharp high. Now, the reason I took this trade was simple. I used the volume profile to measure where is the point of control from this pivot low to this pivot high. And when I expanded to the right, I noticed the POC, or the point of control, and the value area high both shifted to the highs. Right here, the first partial is now taken. Once that happened, I wanted to see if you have a bull trap at the highs. Therefore, I'm considering to measure the last chain of bullish candles. I move the TP to the upper portion of this gap because this area, looking at the daily volume, this is a handshake zone, and we see the volume is very thick in this area. This trade is closed. I measured the last chain of bullish candles after I saw a ton of order coming at the highs. One up close candle, two up close candle, and this is the third up close candle. Because this range is very small, I rather to ignore this indecision candle and move my measurement tool from this pivot low to this pivot high. On this down close candle, I have the confirmation of the break of structure. We have an up close candle. I did not enter. After I saw this wick, I entered short position. First partial was below this low, $444. And the second partial, I decided to get out here at the upper portion of this bullish fair value gap, because still this is a breakout. And that breakout happened with a fair value gap. So this is not just any breakout. We have a continuation. That's a gap. The price respected the gap and went higher. This is the chain of bearish candles that resulted in a tiny consolidation and a leg up. And now we can see there is a wick. What I will have to do is to measure the point of control from this pivot high to this pivot low. 81 contracts, the POC is no longer at the highs, it's here. So this is a good sign. Now I need to see aggression. Now this is that aggression I was talking about and I was waiting for. So right now we have to wait and see how this candle closes and how it would react to this bearish fair value gap in here. So we have a close, almost a close. Maybe I can add one buy limit here. Once that one is active, I will move the stop below this tail or maybe this tail. That order is active, moving the stop 422. TP, I read it to be 1-to-1 because I don't have much of information yet. $365 at risk, $365 as reward. The reason the risk to reward to this trade is set to 1-to-1 is because we have one bearish leg in here from this pivot high to this pivot low, and the price yet it did not close above 50%. Therefore, I cannot consider this as a break of structure. I can move the stop below the recent lows right now. That's here. And minimize the risk to $330. Value area high of the day is here at $438. It should provide support for the price. And there shouldn't be any issues with the price to take the profit. It's going there with speed. The profit is taken. Now I want to see if the price closes above it, or we're going to have some sort of wick. This candle closed above it. That's good. This is a shift in the structure. Now we can find new entries to go long on NASDAQ and target these highs and beyond. If the price gives us another entry in the discount area, which is the lower portion of these chain of bearish candles, half of these two down close candles is where I am interested to go long on NASDAQ. Therefore, I am adding one buy limit at this price, waiting for it to take. Once that's active, I will move the stop below the recent low, which is here at $424. Working with trend lines also logic. It's a classic method of analyzing the market and having average price. But don't worry, in the upcoming sessions, I will use indicators as well. But for now, we are only focusing on volume profile and bearish and bullish baits. I see bad news on CVD. As you guys can see, cumulative volume delta is making a new high. Bulls are pushing, but the price is not making a new high. That means sellers are absorbing the buy orders. This is not good news for our pending order. We can be more careful with where I will leave our stop loss. Therefore, once that trade is active, my stop loss will be more aggressive and my PP will also be more aggressive. First, I will adjust the stop below the current low, $250. As for the TP, same amount, $250, 1-to-1. The reason of having it 1-to-1 is because CVD is making a new high. That indicates we have passive sellers. So volume wise, we are fine, we are safe. Trend line wise, we are fine, we are safe. The bear trap strategy says everything is okay. So does the point of control from this pivot high to this pivot low. But the only signal that worries me is the CVD. While CVD is making a new high and the price fails to do so, that tells us we have passive sellers in the market. That 1-to-1 is also done. I would like to participate in a sell order. Now the probability of this trend line to be broken has increased as it has been tapped once here and another time here and almost in here. And this is a 1 minute chart. Every time the price taps into a trend line, it makes it weaker and weaker. On the upper portion, we have another trend line. Now we have a wedge and CVD telling us a bearish breakout has more possibility than a bullish breakout. I don't have any short setups, only one, which we have these two bullish candles. Half is here. If I want to enter short order, I have to leave one sell limit here at half of these two bullish candles. Once the trade is active, I can move the stop above the high and target at least these equal lows. The low of this bear trap and this low will be in the play. Okay, the price has closed below the trend line. I have to delete these pending orders. The CVD's bear scenario came into play. We are below the trend line now. If it closes below half of this bear trap, then it can easily go to the next target, which is here. Meanwhile, we will try to find if we can find an entry to join the bear right. For an entry, I have the value area high in here, and I want to see how this candle closes. If you have a fair value gap, I might be able to use the mean threshold to go short. I have a fair value gap now and a range. Volume delta still shows we have aggressive buyers in the market, but they are not making a new high. This increases the probability of the downtrend to continue. Looking at the volume profile, we notice that Currently, the price is now below the point of control. This area can provide actual resistance, which it did in here. Now we are closing below that with equal lows. Now I can leave one pending order in here. Once it is activated, stop goes above the wick of this candle. The sell-off began without us. That's okay. If it goes back up into the lower portion, which is unlikely, we can enter a trade. It took the liquidity below these bear traps here. So I can remove this line now. That's the point of control of the day. It's a significant support area. The price can potentially bounce. A tail, another one right at the point of control of the day. We might be able to participate in a long order just based on the POC. There is one low in here at $382. Aggressive sellers has stepped in. You guys can see that in the CVD or cumulative volume delta. We have a tail. Let's measure that tail. I left one pending order at half of that tail near the point of control of the day, but the order is active. Now the stop goes slightly below this tail. As for the profit, since stop is very tight, I can do 1 to 1.5 or 150% bigger than the stop. Therefore, I set one partial at 150% because this is a situation where I can move the stop quickly to break even because of all these tails. If it goes higher, the probability of the price returns back to the half of this tail is very low. The first partial is taken. Now I can move this stop to break even after this candle closes. That candle closed higher. Now I can move the stop to break even. As for the profit, I can target 1 to 2, which is $600. I'm not asking much. That $600 is inside these two bull candles. Speed is increasing. Now let's measure this bearish candle. It closed above half. That's a break of structure. If it closes higher, then the price can potentially go all the way up and test this trend line again. Oh, the profit is taken. Now, let's see what else we have in here. Now we have more equal lows in here. The price came short, went higher, closed above 50% of this bearish leg. The point of control from this pivot high to the current price is still here at $429. This can provide a new short opportunity to target this low where the price came a bit short. Considering this low is hard to take because the price here, it went way higher with a gap. That's a legit bullish breakout. So the next trade will be a high risk trade if I go short. This area is acting as support. And if I extend this to the right, we see all these candles have been respecting half of this fair value gap, which occurred after the bullish breakout. My short bias will be based on cumulative volume delta. POC is here. The price closed above POC, but still below the trend line. Furthermore, we are below the previous day's point of control with 1100. This area should also provide resistance. We have a good close candle. Let's see if we get a fill. I entered a short position. The stop goes above this wick. Not this one. This one is very close. The price can potentially go a bit higher and retest this trend line. Therefore, I would like to move the stop above this wick and risk $350 again in here. And the TP is bigger, 1 to 2, slightly more below this low. But this is not an A+ setup for the reasons I explained a bit earlier. Now risking $285. If I had 2 micro contracts on, I would close 1 micro at the point of control of the day right here. This bullish candle is very aggressive. Back to the mean threshold. almost to the stop. The stop is taken. This was a high risk trade because of this bullish breakout. Let's check our journal for the day. Here's the trades for today. 7 trades, 85% win rate. Don't mind the numbers. We only care about the text. If you have any questions, feel free to write down in the comments, and note on my other channel, FX News ME, I trade and stream live every day. So feel free to search for that channel, FX News ME, JJ Edwards. I am using the same strategy, but I stream it live in front of my audience. Till next episode, stay safe, stay observant, and always protect your capital with stop loss.